Welcome to Investago TV's weekly review, your essential source for global economic updates, keeping you informed on the latest market trends and financial insights every single week. Buckle up! March data from China presents a mixed outlook for the nation's recovery, raising questions about its potential to drive global growth. On one hand, exports surprisingly grew year-over-year, fueled by the clearing of backlogged orders, boosting GDP growth. However, consumer and producer prices indicated weak domestic demand, hinting at the need for the further stimulus. Moreover, China's housing market collapse, accounting for over 25% of its economy, is impacting its wealth effect. Although the People's Bank of China is pumping short-term cash into the banking system, surging loan demand might not signal business confidence, but rather refinancing existing debt. This uncertainty suggests China's recovery may not strongly support the global economy. US money supply contracts at the fastest pace since the Great Depression, with the M2 benchmark falling 2.24% year-over-year in February. This marks the third consecutive month of contraction, raising concerns about the potential economic downturn. Despite the decline, the money supply remained 38% above pre-pandemic levels. The contraction results from the Fed reversing pandemic-era liquidity injections, reducing its balance sheet and decreasing bank deposits. While some economists warn of an impending recession, others like Fed Chair Jerome Powell do not believe money supply directly impacts the economy. S&P 500's recent 6% rally raises concerns as earnings outlooks remain pessimistic and liquidity conditions may become less favorable. Wall Street strategist Wilson, known for bearish predictions, anticipates earnings growth to bottom out in Q3 or Q4, contrary to expectations of a second-half rebound. The March rally was driven by increased liquidity to address regional banking crisis, but this may change as policy expectations shift. Wilson notes that the Fed is not cutting rates despite negative forward EPS growth due to inflation, making this cycle unusual and potentially causing headwinds for equities until easing begins. China's economy has shown signs of a stronger recovery than expected, with consumer spending playing a crucial role after the lifting of strict zero-COVID measures. In the first quarter of 2023, the economy grew by 4.5% compared to a year earlier, marking the fastest growth rate since Q1 2022. Retail sales in March surged over 10%, the fastest pace in almost 2 years, offsetting a slowdown in private sector investments. This increased consumer spending indicates an eagerness to spend after years of restrictions, but it remains uncertain whether this is a temporary revenge spending phenomenon or a lasting shift in driving overall growth. That's a wrap for today, and I'll catch you next week. Don't forget to follow us on our social media channels to stay updated. Wishing you continued success on your journey.